Many people believe that you need thousands of dollars to start investing in the stock market. But the truth is, you can begin your investing journey with just $100. Whether you are a student, a young professional, or someone looking to build wealth over time, this guide will show you how to turn your first $100 into a strong investment portfolio using smart strategies. We will cover the best ways to invest $100 in stocks, how to maximize growth and minimize risk, the secret to long-term investing success. If you think $100 is not enough to make a difference, stay with me to learn how small investments can lead to big wealth. 1. Why start investing with only $100? You might be wondering, can I really make money with just $100? The answer is yes, and here is why. You develop strong investing habits early. The sooner you start, the more you learn. You take advantage of compound growth. Even small amounts can grow into big money over time. You do not need to time the market. Investing small amounts regularly reduces risk. Technology now allows fractional investing, meaning you can own pieces of expensive stocks like Apple, Amazon, and Tesla. Now let's get into the best ways to invest $100 in stocks. 2. Choose the right investment platform. Since you are starting with $100, you need to pick an investment platform with low fees and fractional share options. Here are some great options. Best platforms for small investors. Micro investing apps. Invest in fractional shares with as little as $1. Online brokerage accounts. Some allow $0 minimum deposits and offer free stocks when you sign up. Robo-advisors. Automated investment platforms that diversify your portfolio for you. Employer-sponsored plans, if available. If you have access to a 401k with employer matching, this is free money. Pro tip: choose a commission-free brokerage that allows you to invest without extra costs eating into your small investment. 3. What to invest your $100 in now that you have your investment account? Where should you put your money? Option 1. Invest in ETFs, best for beginners. Exchange-traded funds, ETFs, are baskets of stocks that help you diversify your portfolio with just one purchase. Low risk, you invest in multiple companies at once. Great for long-term investing. ETFs are stable and grow over time. Low cost, many ETFs have low fees, so more of your money is invested. Best ETFs for $100 investment: S&P 500 ETF, SIFPY, or VOO. Invests in 500 top U.S. companies like Apple, Google, and Microsoft. Total Stock Market ETF, VTI, invests in the entire U.S. stock market for maximum diversification. Dividend ETFs, VYM, SCHD, pay you dividends for passive income. Pro tip: if you are just starting, ETFs are the safest, easiest way to invest $100 and grow your wealth over time. Option 2. Invest in dividend stocks. Earn passive income. Dividend stocks pay you money just for holding them. These companies share their profits with investors regularly. Great for passive income. You get paid just for owning the stock. Long-term wealth builder. Reinvesting dividends helps your money grow faster. Lower volatility. Dividend stocks tend to be less risky than growth stocks. Best dividend stocks to buy with $100. Coca-Cola, KO, a strong, stable company that pays reliable dividends. Johnson & Johnson, J&J, healthcare giant with a long history of paying dividends. Procter & Gamble, PG, a household brand that pays consistent dividends. Pro tip: use a dividend reinvestment plan, DRIP, to automatically reinvest your dividends and buy more shares over time. Option 3. Buy fractional shares of big companies. Have you ever wanted to invest in Tesla, Amazon, or Apple but thought they were too expensive? With fractional shares you can own a piece of big companies. No need to buy a full share. Diversify your investments. Invest in multiple stocks with just $100. Perfect for beginners. Get exposure to high-growth companies. Best growth stocks for fractional investing. Apple, AAPL. Strong brand, great long-term growth. Amazon, AMZN. Leader in e-commerce and cloud computing. Tesla, TSLA. High-growth stock in electric vehicles. Microsoft, MSFT. A tech giant with consistent growth. Pro tip: if you believe in a company's future, fractional shares let you invest early even with small amounts. 4. Automate your investing for consistency. Want to make investing effortless? Use dollar cost averaging, DCA. How it works: instead of investing $100 all at once, invest $10 per week. You buy more shares when prices are low and fewer when prices are high. This reduces risk and smooths out market fluctuations. Pro tip: set up automatic weekly deposits so you never forget to invest. 5. What to do next after investing your $100? Reinvest dividends. If you invested in dividend-paying stocks or ETFs, opt for a dividend reinvestment plan, DRIP, to automatically reinvest your earnings. This allows your money to compound over time, purchasing additional shares without any extra effort. Add more funds. Even small, regular contributions of $10, $50 per month can significantly accelerate portfolio growth over time. Consistent investing, even with modest amounts, helps you take advantage of compounding returns and market fluctuations. Stay invested. The stock market experiences ups and downs, but historically, it trends upward in the long run. Avoid making investment decisions based on short-term volatility and focus on long-term growth. Keep learning. Expanding your knowledge is key to becoming a successful investor. Follow financial news, read investing books, watch educational videos, and track stock market trends to make informed decisions and build confidence in your investing journey. 6. Common mistakes to avoid when investing $100. Do not try to time the market. Many beginners wait for the perfect time to invest, but the truth is that no one can predict market movements with certainty. Instead of waiting, start investing small amounts consistently through dollar cost averaging to take advantage of both highs and lows over time. Do not put all $100 into one stock. While it may be tempting to invest in a single exciting company, this approach carries high risk if that stock underperforms. Instead, spread your investment across ETFs, dividend stocks, or fractional shares of multiple companies to reduce risk and increase stability. Do not panic if stocks drop. The stock market naturally fluctuates, and short-term losses are common. Many new investors sell out of fear when prices drop, but history shows that markets recover and grow over time. Focus on long-term investing, stay patient, and trust in your strategy rather than reacting emotionally to market swings. Final thoughts: investing does not require a lot of money. Even $100 is enough to start building wealth. Your action plan: open an investment account. Buy ETFs, dividend stocks, or fractional shares. Set up automatic investments, DCA. Reinvest earnings and stay patient. What will be your first investment? Drop a comment below. If this guide helped you, hit the like button, subscribe for more investing tips, and turn on notifications. Start today. The sooner, the better.